Saturday, July 11th, 2020, Monaco 64, home of alternative economics and contrarian views. Today I'm going to look at Lebanon, the country in the Middle East. Lebanon has been known to be the Switzerland of the Middle East, especially back in the 50s and 60s before that country erupted in sectarian and civil war, loads of troubles in that country. In the last decade, I think it's kind of stabilized, but many people don't know that it's a relatively advanced economy, or used to be a lot more. It's heavily influenced by the French, going back hundreds of years. It's kind of a mix between Middle Eastern and European, I would say. And I've been keeping an eye on Lebanon the last few weeks, 3 weeks or so. I saw a headline 3 weeks ago about the losses that the Lebanese central bank had incurred, and I was curious about that. And more recently now, there's a lot of stories about how that economy is completely collapsing. And one of the reasons I'm looking at this, though, is that this morning I wanted to look at the general commodities. I took all the commodities that are in the Goldman Sachs Commodity Index, and I had a look at their charts going back decades. For most of them, some of them I've only gone back a few years, but I think it's an exception. And what I found is that most commodities are not really pointing to higher prices for those commodities. It's only gold in particular that is rising quite strongly, leading the way, or kind of not leading the way. Silver, of course, is starting to show some sign of life. And of course, silver is considered industrial as well, but we know historically it's also a monetary commodity. And then you've got copper, which is showing some signs of life. And copper, of course, is considered an industrial metal. But if you go back many years, well, hundreds or thousands of years, copper has been used as money. We still have the 2p or 1p coins, or the pennies in the US. They look like copper, of course, but all the copper has been taken out. But we still call it here in the UK coppers, right? The 2p coin or the 1p coin. So, and where does Lebanon come in to all of this? Well, there's a few factors looking at Lebanon that make me think that we could be experiencing already what the Economist magazine back in '88 depicted, with the phoenix rising again with that gold coin, 10 Phoenix 2018, and all the paper money or paper currencies below that bird burning, right? And it's interesting. The other thing I just realized is that the phoenix bird, the name phoenix, comes from Phoenician, and the Phoenicians originated from that region where Lebanon is, the Levant, and the phoenix bird is called a phoenix bird because it's red. And the Phoenicians, of course, used to trade red dye, and that's why that name is associated with them. And now you've got Lebanon, their economy collapsing, their currency. Well, this is the interesting part, and I'll start with this, because then we can look at the charts for the general commodities. And I've been following the Lebanese pound. So if you look at the Lebanese pound, or USD LBP, and you go back, well, I've gone back as far as I can here on this chart. It's I think it's almost 20 years. You can see that it's kind of fixed there at 1,500. $1, you get 1,500 Lebanese pound. So if you were a trading machine, an AI machine, or a high frequency trader who use programming, you'd think everything's fine in the Lebanon, right? Their currency is doing okay. And the reason why I'm showing you this is that unfortunately, I think, yes, the general commodities are not showing any sign of trouble for the US dollar, which is, of course, the major fiat currency. But don't be fooled by that. We're going to come to what's happened in Lebanon. So, first of all, I just wanted to show you the energy sector. So we've got all the different components of the Goldman Sachs commodity index here. There's 6 of them, as you can see. And yeah, and they're going back quite a bit. And it doesn't look anywhere near like breaking out or any trouble in terms of energy prices. So there you go. That's the energy. Industrial metals, as you can see here, this is from the LME, London Metals Exchange. And don't be mistaken, the London Metals Exchange is not where gold is traded. Gold and silver is traded through the LBMA. LME is more industrial metals. And this is a very like unique market. I had colleagues at work who used to trade in the LME, and it used to be quite a specialist market, and the brokers did very well in this market. I think Nigel Farage, for example, he was an LME broker. And you can see from these charts as well that aluminium, or aluminum as Americans would say, doesn't really look like it's going anywhere. Lead, neither. Zinc as well, it is going up a bit, but it's still nowhere near the recent highs. And the same thing for nickel. And then copper, as I was talking earlier, copper is going back money, right? It's the change for the silver. Silver is the change for the gold, and copper is the change for the silver. Copper is approaching that 3-year high. So just bear with me. So what I'm trying to show you here is that commodities are not showing any signs of trouble, but so isn't the Lebanese pound, right? So now agriculture, same thing. You looking at those charts, you wouldn't be concerned. And of course, all of these are in US dollars. This is all the agricultural components of the Goldman Sachs commodity index. And then you've got livestock, live cattle, feeder cattle, and lean hogs. They as well are not really showing much life either. So I thought I was going to see a lot more bullish charts, because with gold almost near its all-time highs, even in US dollars now, with silver trying to break out, with copper doing quite well, I would have thought, wow, this is, let's have a look at the commodities and confirm this. So what do I think is happening? Should we be worried about inflation? Well, it depends how you define inflation. I think we've had, of course, inflation of money and credit in the system. It's been massive. Of course, they define inflation nowadays as a measure of prices, which they doctor. I think what we have to worry about is really collapse of the currency. And what will bring that down? Well, I think it's all to do with the debt, the huge amount of debt that we're taking, not only in the UK, but in the US, in Europe, everywhere. And Lebanon, I think, is a microcosm of this. And I'm going to come to Lebanon in a minute. And I think you'll find it really interesting. So now the monetary metals. I think the Goldman Sachs Commodity Index, the Wikipedia page describes it as precious metals. But I think the appropriate term really is monetary metals. And you can see that gold is leading the way. Well, basically because gold is the top dog, I would say, in terms of monetary metals. And then you got silver here trying to break out. 21, of course, is the key level. But you go back far enough, you can see that silver has done well. If you draw a straight line from the late 60s until now, the price of silver has gone up. Yes, we've had these big spikes in between to 50 bucks. And then I know I had copper as industrial metal, but now I'm asking the question, copper coming back as monetary metal or signaling fiat currency collapse? It could be a bit of both. I think it could definitely be fiat currency collapse. So here's the chart of copper. It's looking quite good. It's picked up quite a bit. Of course, we're nowhere near the recent highs, but it's looking more bullish than the other commodities that I showed you. So now let's go look at Lebanon and what's been happening there. As I told you before, it has had the reputation of being the Switzerland of the Middle East. There are a lot of big banks in Lebanon, a lot of people in the area from other countries bank in Beirut, in Lebanon. So you can see here, this is from the Asia Times. Switzerland of the Middle East unravels with bond yields nearing 2,000%. Lebanon appears on the brink of default for the first time in its history. The World Bank this week warned that Lebanon, once dubbed the Switzerland of the Middle East for its unique status as both a snow-capped holiday destination and discreet banking hub for Gulf Arabs, is at risk of implosion should it fail to reform. So this was from January. So let's go back to the first article actually I saw 3 weeks ago, and it was this one. IMF reports 49 billion losses at Lebanon Central Bank as bailout talks drag. Infighting between government and Banque du Liban, I guess that's the Lebanese central bank. You see French influence in the Lebanon. It goes back to the Crusades. A lot of the Knights Templars, the Crusaders, were from France, of course. Threatens to derail emergency funding. So let's go through this article. The reason why I was interested in this is that the central bank actually lost money. People think central banks can't lose money, but the Lebanese central bank has lost almost $50 billion. And then I checked the GDP of Lebanon. I think the number before the crisis was just above 50 billion per annum. So they've lost almost their whole GDP. Just keep that in mind when you think about the Fed's balance sheet, which is now around 7 trillion. The Bank of England's balance sheet, which is around almost 900 billion pounds right now. Just think about that and the GDP and all the assets that they're buying now. Not just government bonds, but all the rubbish they're buying, the corporate bonds, the junk bonds, and the ECB as well. Keep that in mind. So the IMF has warned Lebanon that its central bank has accumulated losses of as much as 49 billion as divisions between the government and the Banque du Liban threaten to derail vital bailout talks with the multilateral lender. The BDL does not publish profit and loss accounts. In recent years, it has used a complex series of sovereign debt and currency swaps with local lenders, what the central bank governor has called financial engineering. I guess they learned that from the West, from the City of London, from the New York Fed, from the Federal Reserve, financial engineering. So the Lebanese have been at it, in particular the Lebanese bank and the central bank, to shore up the banking sector, attract foreign currency, and stabilize the Lebanese pound, which is pegged to the US dollar. But I bet right now, if you go to Beirut or anywhere in Lebanon, it's going to cost you a lot more than the price tells you. And it's a lot like gold, of course. When you buy physical gold, coins or bars or silver, the premium, that's the real price. And that's another lesson from this. The activity combined with the impact of Lebanon's default in March on the bank's sovereign bond holdings and the collapse in the value of the currency has resulted in accumulated losses of about $49 billion or 170 trillion Lebanese pounds. The IMF has told the finance minister and central bank governor, according to people familiar with the matter. The losses equate to 91% of Lebanon's total economic output in 2019. As I said earlier, it's almost the same amount. And I think there's losses as well for the private sector banks. So it's not just the central bank that's losing money. According to World Bank figures, and are almost equal to the total value of the deposits held at the Banque du Liban from the country's commercial banks. So there you go. If the central bank doesn't have any reserves, if they lose everything, how are the commercial banks going to get the cash? How are the people who think they have cash at the commercial banks get their own cash? So now you can understand why you need to be out of the banking system. If it happened in Lebanon, I think it can happen definitely in the UK, definitely anywhere else, in the US, in Europe, because our central bankers and commercial banks or private banks are basically doing the same thing. It was going to happen in March when the pound was collapsing here. It was only because the Fed stepped in and did a swap line with the Bank of England that the pound rebounded from around 114. But I don't think the crisis is over. We've been told there's going to be a second wave. I think there will be more lockdowns. And when it hits, I think we need to be careful. I'm not sure the central banks are going to come to the rescue this time. And by that, I mean the Bank of England, the Fed, or the ECB. Even though they're saying right now that they're behind the system, you can't trust these people, in my opinion. But let's keep going. While the IMF's assessment is broadly accepted by Prime Minister Hassan Diab's government, the central bank and some members of parliament argue that the BDL's losses are substantially lower. The disagreement, which has pitched Mr. Diab and the IMF against the country's long-serving central bank governor, Riyad Salam, I guess he's the Alan Greenspan or Ben Bernanke of Lebanon, is threatening to block the emergency financing Lebanon needs to stabilize its free-falling economy. So I'm going to stop here so you can see how things are really not great in Lebanon. This article, of course, was from June 25th. That's when I first started looking. Of course, I had noticed some months ago that there had been protests against the banks, I think even last year in Lebanon. So this thing has been brewing. So this week, I saw another article. This was July 6th, earlier this week. Lebanon's once lauded bankers under fire as economic crisis deepens. So this reminded me of the City of London and Wall Street. And why would that remind me? Why would the Lebanon and its banks remind me of that? Well, you will see when I read this article here. It says bank branches are barricaded and executives are anxious not to be seen in public. So here we go. Lebanon's bank have been lauded as the jewel in the country's economy for decades. Well, you listen to politicians here in the UK. The City of London is like also the jewel in the crown of the UK economy. That's why it's so important. That's why they keep trying to bail it out. I think it's very similar. Of course, Wall Street for the US is not as important, of course, because the US economy is much more diversified than the UK economy or the Lebanese economy. You have to admit, though, that even Wall Street has become really an important part of the US economy because it's such a credit and debt-based economy that it's become kind of a jewel in the crown as well, I would say. So this is where I started thinking about how too dependent we are on finance, not only in the UK and the City of London, but everywhere around the Western world. And I think this is where Lebanon is like a microcosm of this phenomenon, but it is a harbinger, and that's why I think it's the first domino to fall. Yeah, we're not getting hints in the commodity markets, but if you take the Lebanese pound and you use that to look at the commodity prices, it's also not doing anything. By the middle of 2019, their combined assets, that's the banking sector, had increased 83% in 8 years to $253 billion, equal to roughly 5 times the country's economic output. Well, and the too big to fail on Wall Street, City of London, and the big European banks, they've got over 1,000 trillion in derivatives, which are actually off balance sheet, but they also have trillions in assets. In Beirut, branches boasted sparkling glass facades and fancy atriums, and bankers entertained clients with cigars and fine dining in the city's smartest restaurants. Well, that's the City of London to a T, right? And also Lower Manhattan to a T. Maybe not so much right now because of the lockdowns, but that's the way it's been for the last 20 years. Now, less than a year later, branches are barricaded with thick metal plates to protect them from protesters' firebombs. And those same executives are anxious not to be seen in public. Well, there you go, Jamie Dimon. Am I saying this is going to happen in New York and in London? Not necessarily. It could happen completely differently, but this just shows how things have changed. Last month, fires were started outside the central bank's office in the northern city of Tripoli, while across Beirut, "Down with the rule of the bank" is sprayed on walls. So the Lebanese people have woken up to the fiat currency scam of the bankers. And I'm sure a lot of these bankers, though, have left already. They're probably somewhere in Switzerland or Monaco with their millions stashed away. An economic, fiscal, and monetary crisis has accelerated in Lebanon since March, when the government defaulted on 90 billion of debt. Month-on-month inflation surged to 56.5% in May. Poverty and unemployment are soaring, and many Lebanese believe the country's bankers and its politicians are to blame. So there you go. They've been playing the game of financing governments and financing the banks and the central banks. They've been working all together, just like they're doing here in the UK, in the US, and in the ECB for the Eurozone. It's so familiar. So let's keep going here. The banks made so much money along the way, they are entirely partners in the crisis, said Jad Shaban, a Lebanese economist. They are villains as much as the ruling thugs and the political parties who stole money and killed people. Lebanon depends on imports, and for years the central bank has helped to finance the trade deficit by offering high interest rates, sometimes more than 10% a year, on dollar deposits from commercial lenders. I know the Fed and the US government is not offering 10%, but still compared to the zero rates or negative rates in Europe and Japan, US rates are still relatively high, but I guess they don't need to offer rates because they can always print the money, the Fed, and keep rates low. But I think this is just the same thing the Lebanese central bank did, just in a different fashion. The banks, in turn, passed those generous rates to their clients, helping to attract foreign currency from local depositors and the large Lebanese diaspora abroad. So, what about for Wall Street, City of London? How's the money being attracted? Well, I think it's been attracted through the stock market, through the leverage, through all the other financial engineering, which is also being used in Lebanon, but it's not as refined, of course, as in the City of London or New York, but it's still the same system. The system has helped Lebanese banks generate impressive profits. Well, it sounds familiar, doesn't it? It seems like the Wall Street banks, City of London banks, even with this crisis, they're raking in billions. Even with the bailouts and all the programs, they're always making billions, right? But last summer, fragile investor confidence waned. The flow of dollars began to dry up and the system started to break down. Mass protests began in October, stoked by frustration with stark inequality, and eventually toppled the government. Well, there you go. Yes, there's been protests in the US and all around the world because of what happened in Minneapolis. But I also think it's a lot to do with inequality because people are hard up right now and the bankers still making billions, right? So now let's have a look at what's happening on the ground in Lebanon. I found this article from Sky News, and this is from today. It says Lebanon, coronavirus and economic meltdown leaves country on the brink of collapse. I think that headline is misleading, but this is mainstream media, of course. I would say banking system and economic meltdown leaves country on the brink of collapse. I think this health crisis it is just a cover and maybe even a trigger as well. The combination of the coronavirus outbreak and an unprecedented economic crisis has created a perfect storm in Lebanon. Again, I would say it's more years of banking abuse and fiat currency inflation and Ponzi scheme banking have led to this perfect storm in Lebanon. And I think that perfect storm is gonna come over towards Europe and North America and other countries around the world. This is the first domino to fall, as I said earlier, the Lebanon domino. What does Sky News say? Lebanon's economic meltdown has left the country on the brink, with one of its top doctors warning that medical supplies in hospitals across the nation have now reached critical levels. The combination of coronavirus on top of an unprecedented economic crisis has created the perfect storm. Firas Abiad, the CEO of the Rafik Hariri University Hospital in Beirut, told Sky News. I think that, as they say, it never rains, it pours, and what we're seeing is crises after crises, Dr. Abiad said. Each day you're running from a power shortage to a medication shortage and so on. So this is what happens when the currency collapses. You can't get anything. There is no currency. No one's willing to accept that currency. And that's why I think gold is signaling some kind of trouble for the world's major fiat currencies like the dollar, like the pound, like the euro. And that would be a worldwide crisis. And you would get Lebanon worldwide. And that could be quite serious. And that's why I think people need to be aware of this and need to be outside of the banking system as much as possible. And even if it doesn't happen, if somehow our leaders in the West are able to skirt the problems that the Lebanese haven't been able to, then that's fine. You're not going to go poor having precious metals or being outside the banking system. But if it does happen, you will be probably in a good situation. compared to the general public, I would say. Yeah, it won't be pretty, but at least you'll be able to protect yourself and your family, and maybe even friends and people in your community as well. As manager of the country's only designated hospital for COVID-19 patients, he finds himself at the heart of one aspect of a nation at breaking point. So I think they're playing up this health crisis a little too much here. And I'm not surprised because this is Sky News, right? But as you saw from what I spoke about, the Lebanese banking system has been like operating like a Ponzi scheme for years. We are so much on the brink. All the services we are providing are in danger, he said, adding, at the moment, this call for global help is extremely important before we start cutting down on these life-saving services. His team gave Sky News a tour of the hospital, the biggest public hospital in the country. From department to department, they showed us a place struggling with multiple challenges. So I'm going to focus here on some other things. It says the electricity is intermittent and drug supply is dwindling, the consequence of eye-watering inflation. That's why when I saw that headline 3 weeks ago about the central bank in Lebanon, first thing I checked was the currency, but the currency doesn't indicate any inflation because it's manipulated. It's kept at an artificial level. And that's why I think it's important to realize that even though commodities are not pointing to inflation or any crisis, I think it could happen overnight and you won't be able to get any of those commodities and those prices won't mean anything. Just like the price of all those commodities converted into Lebanese pounds don't mean anything right now. So there you go. I'm going to stop here. I went from trying to look at the commodity markets to see if they're pointing to higher prices, if we're seeing a move away from financial assets or paper assets into tangibles, and I couldn't find it. But one thing I found is that the monetary metals, and I will include copper, they're showing signs that things are not that great. While the normal commodities, I think, are not a very good indicator of the troubles brewing underneath the hood or the bonnet of the financial system. And I think what is happening in Lebanon, the unraveling of their banking system, their central banking system, their currency system, is a microcosm of what's going to happen, especially here in London, in the city of London, and in the UK, on Wall Street, and in the United States, and in Frankfurt at the ECB and the Eurozone. And I guess you can extrapolate that to Tokyo, Japan, everywhere around the world where fiat currency is used, which is everywhere. So I actually think Lebanon is the first domino to fall of the fiat currency collapse that the Economist magazine was forecasting 30 odd years ago or so. Hopefully it isn't, and everything's going to be okay. But I'm not too convinced. So don't take a chance. Protect yourself, I would say. And even if it doesn't happen, it's not going to hurt you to protect yourself. It doesn't hurt you to buy auto insurance or contents insurance for your house or whatever insurance you have. Yes, you're going to have to pay for it, but at least you have the peace of mind. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, Parlay, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.